Hello, good evening. Hope everyone can hear me. Hope everyone's doing all right. I hope not too many people are on the wrong side of these moves, because they're pretty tough, you know. Even when you're expecting the market to go down, and you kind of plan for it and you think it's going to happen, even when it happens, it's still, they just fall so much harder than they rally. It's always just a little bit dramatic. I would like to make them reverse. I'm quite surprised, to be honest. I thought that the oh, you've got an echo. Okay, let me see what I... Has the echo gone now? Hopefully it has. Okay. Alright, good. Okay, so even when we're expecting the market to sell off, and it does, it's always still kind of, you know, for me it brings back really bad memories of like 2008 and anyway, here we are. This is the S&P. I must admit, I thought that the turning point would come on Wednesday, because on Wednesday is the meeting of the Federal Reserve, and Powell, the Fed governor, signaled very clearly at Jackson Hole that he was going to have to, at some point, start tapering all the stimulus that they had put into the market. And to be quite honest, they've been, you know, putting stimulus in since the 2007-2008 crash crunch. They've really not really taken their foot off the gas that much, but COVID, they went completely ballistic. And now that we are starting, I know it doesn't feel like we're recovering when so many people are sick. Excuse me. But, you know, really around the world, it is we are recovering. People are going back to work, and it is causing really kind of lumpy supply stuff. And we really do have inflation. Like, the Fed can't ignore it. The house prices in, I don't know if I said this last week, but house prices in the US went up 19.9% in the last year. That's higher than on records ever since they've been recording it. That's higher, way higher than they went in 2007, 2008, you know, before the crash. And now the, you know, core CPI, which is the metric of how they measure inflation, you know, is a third housing, and that's at some point that's going to feed into core CPI, and they really are going to have to do something about it. You know, you can't, you can say, oh, it's, you know, because of the lumpy recovery. You can blame it on energy prices. You know, I wouldn't be surprised, because it's the Bank of England on Thursday, if they, you know, try and blame inflation in the UK on energy prices, but it's not. It's everything. The price of everything is going up, and including wages, and they are going to have to take their foot off the gas. The problem is the Fed and all central banks have to ride this tightrope of they don't want to take this, they don't want to be the ones to crash the market. So they've put all this stimulus in, but how are they going to take their foot off the gas? The way Janet Yellen did it was she really, really prepared the markets really well. She told them well in advance. Everybody knew when she was going to do something that it was coming. So I don't think, like with the market crashing the way it is, that Powell is going to cut stimulus on this month, but he might. But he might signal that he's going to do it in the coming months, and that honestly could be enough for the markets to keep swooning, if you like. So this is where we are. So we've broken down, and for me, in terms of moving averages, we've broken down very clearly. I don't mind us going underneath the moving average that's support, but I always watch very closely what happens when you come back and retest it from underneath. So in this S&P, we've clearly gapped this. I've put the cash up because I want to show you the gap lower that we had on the open, and how we're trading underneath these previous lows. And for me, that normally signals a move back to the 200 moving average. But I'm going to say probably, now I normally, you know, when I look at fib retraces and I put my fib retrace tool on, I'll look at the first swing, which was here, and you can see we were kind of balanced on this 61.8 level, and then it broke. And once we make a new low, I also like to then put the fibs on the entire swing. So I don't like to pick lows randomly in the swing. I might take this low because this low is clearly a kind of bigger correction here in the middle, but I generally prefer to do the whole swing. So we could say potentially, if we go from this low in the middle, our first target, the 236 fib retrace of would be 42.32, and so that's still quite a way to fall for the S&P. And that would also line up with this previous low and high. There's a lot of support and resistance around 42.32. So that would be the first potential bounce level that I would be looking at. And if I did that, I would also kind of measure this swing. Let's do that and see if they line up. So the clear message from this is that this has got further to fall. And so if we're looking to kind of step in and buy the dip in Bitcoin, maybe it's not quite yet. So 42.32, but I actually think that if we go back to the yearly low to highs and the March low, then we go lower than that, and to these highs, sorry, March 2020 lows down here, 39.86 potentially. So for now, we're going to say, okay, first potential target's 42.32, and we're not there yet. So let's see if we can get there and bottom there on Wednesday. I would expect us to have a little bit of a bounce when we first get there. Sometimes, let's see where the 100 moving average is. I don't use it, but sometimes the market will try and bounce around the there. So first support, further to fall, and all of these, for me, all of these stock index charts are doing the same thing. So I would also say caution that I think there might be quite low liquidity. It's a holiday in Japan tonight and China tonight and tomorrow night, and so you know we might see some funky moves really going into the Fed on Wednesday. So if we do the same exercise here with the Nasdaq, haven't made new lows yet. So I'm always going to say the first swing low that you break is always the first place that you're going to kind of look to come back to. So first potential support at 14.716 in this Nasdaq, but otherwise let's do the swing low from this year to high from the March kind of swoon that we had, and which is here. Ooh, we're just underneath this 236 fib. So that's quite interesting because for me, the S&P is underneath it as well. And if you get underneath it and you really mean to break it, it should be resistance for you to keep going lower. So if we look at the S&P on the short-term swing, yeah, no, we're not quite there yet, are we? Okay, no, not that one. I'm thinking of Bitcoin. I better shut up here. Okay, so further to fall, whichever way you measure it, doesn't mean that we won't bounce between here and our target, but it does mean that I don't think that we have finished going down yet. One of the things people look at, for example, they'll tell me, oh, well, the RSI is like really oversold. So if we look at the RSI here, you know, we're down to 30. We haven't been here since March 2020. Here's what's quite interesting though, March 2020, because if we're going to do a correction like that, which was the beginning COVID sell-off, if we look where when we got to 30, that was here. And we continued to sell off like this. So, you know, being oversold in terms of RSI on its own is not quite good enough for me to buy it. You know, I need to see something else as well. So a really good support and resistance levels, some really good price action to say that the buyers have stepped in and they're buying it, something like that, you know, a double bottom. I always think that means we've stopped going down, and I'm looking for a bounce. So there we go. Jonathan, Doom Monday. It is kind of doomy, isn't it? Do you know, and here's, you know, maybe we bounce into the Fed, you know, I wouldn't be surprised. But when you have a day like this, the most common next candle is likely an inside bar. You know, even when we make the lows and we have big red down days like this, the next day is an inside bar, usually, you know. It takes, this is a lot of, it's going to be quite, here's the thing, it's going to be quite hard for institutional money to step up and buy this, you know, ahead of the Fed on Wednesday, unless they know something. So this is going to be downward pressure on crypto. The dollar hasn't really bounced that much, but yeah, these stock indexes are not looking good. Teetering on support, you know, and some of the other, again, we're closed in China, and we're closed in China and Japan tonight. This ASX Aussie stock index as well, broken huge support here, comes from all the way back in March 2020 high here. So all of these are looking like more downside to come. Let's take this away and do this way. $68.70 and these lows would be where we'd be looking for next in the ASX. So every chart that I look at says that we've got more downside to come for stock indexes. Cranky bits. Am I leaning towards a taper now? A taper? Yeah. Okay. Yeah. Like he was very. I don't understand why people were quite so bullish after Jackson Hole, because clearly he signaled there that taper was coming. So you know, I don't think he. I think he'll. I can't see him doing it while the market is falling, but I do think he'll signal that it's coming. Yeah. Okay. So more downsides to come, and we'll watch for these levels to be resistant. So let's start with Bitcoin. Okay, here we go. Now, one of the things that you kind of this is Bitcoin against the dollar. This is the big drop that we had that started in April. That really kind of wasn't a completed correction. It didn't feel like to me. So. You're feeling the same way about the taper, but it seems a bad time. Yeah, you know, I wouldn't be surprised if they crash the market to stop him. Anyway, here we are looking at Bitcoin on a weekly chart. I always felt like this was the first leg of a bigger correction here and in Bitcoin. And if I put it into log scale, by that I mean that this was from the, I see the December 18 low. It's quite an important low. And this is a wave 1, 2, 3, and we're in a big wave 4, if you like. And so if we look at how long, I've always said this, if we look at how long wave 2 took, very often waves 2 and 4 are equal in time, if not in price. So if we apply that here, that puts us making a low at the end of December, first week of January. And that's also a very common time for Bitcoin to rally. So I think that we actually trade sideways in this range between now and the end of the year. And then we're going to have our big wave 5, which very often can extend and extend and extend. So everybody who's kind of worried they're going to miss where, you know, they're going to miss the low and the long-term hold for Bitcoin, I kind of feel like it's not yet. So because this was quite clearly a 3-wave correction, and corrections are normally 3 waves, sometimes when you have a wave 4, it looks different if it's simple like that, and it'll be 5 waves, so it'll be in a triangle. So we could see something like that takes us into January. We could see a declining wedge that takes us into January, something like that. That wouldn't be weird with 5 waves. I'm not sure how. There's like a gazillion ways that these wave 4s can unfold. And yeah, I think that's what we're looking at. So unfortunately, so sometimes I use fib rules to help me. So if I'm wrong, they'll tell me also if I'm wrong. So if we measure from this high to low, why won't it change? Come on, here we go. If we measure from this high to low, you can see that we really did kind of stick it at reverse at this 61.8 level. And when you do that, you've got that golden ratio zone thing going on where the 38.2 is support. And sometimes you can go back and forward in this golden ratio range for a while. If we break this 38.2, which is at 42,500, we're going to drop down to 37,200 next. Now that's assuming that, you know, this is a correction complete and we're starting a new upswing. If this is not, if this is a big ABC, then this leg here that we've started lower will have a mathematical relationship to the first leg. And usually sort of 61.8 or sometimes they're equal. So if we do that from this high to low, you can see that when we get this swing 61.8 of the first swing, that we come down to retest 30,000. Now, while we're in the golden ratio zone in the middle here, that it's actually not clear that we've finished this B leg. To be honest, we could actually, you know, squeak a little bit higher and then still go down. This really is, we're holding the weekly 20 moving average. This really is one of those zones where between this here and here where the bears and the bulls fight it out. But I think underneath 42,500, yeah, it's more likely that we're going to see more downside. So right here, where we've stopped today, where we made the low today, is a potential bounce level. And if I measure this high to low, short-term highs to lows, you can see this is also where this leg is 61.8 of this leg. So this is a potential level where we could see a bounce. So if you're long a lot of Bitcoin and you're not liking this, then I would say watch for a bounce here to get out on. And when you are going back and forward in between this 61.8, 38.2 zone, the 50% in the middle very often acts as a pivot. And if we look at the highs and lows here, we can see that that's exactly what's been happening. So lows, lows, highs, highs, lows. And so where are we likely to bounce back to on this bounce? That 50% level in the middle, which is at 46,826. So that would be if you, you know, if you wanted to sell someone a bounce and buy it back lower at 46,826. There's no guarantee when we get up there that it's going to be resistance, but it should be. So that's how I'm seeing Bitcoin at the moment. I do think there's a risk of we continue lower, even though it looks like we're on pretty good bounce support here. So don't be surprised if overnight we have a little dip underneath this and hold it. Bitcoin loves to do that false move higher. You know, I've noticed for the last 2 weekends in a row, okay, so for example, and this is something to remember at the weekend, if you know, I've stopped trusting breakout moves at the weekend. So here, for example, big picture, if we looked at the dollar, this was from this high to this low. Here we were at the 61.8 level and we squeaked above it, didn't we, on last weekend. And I thought, oh, well, if this holds as support, we're going to keep going higher and we'll go up another level to the 60. But I didn't trust it because it happened on the weekend. And I thought, well, I'll see what happens when we come back and test support. And it failed. And here we did the same thing again on a smaller scale. So if exactly the same trick. And this is people tripping liquidity at these levels. So if we go from high to low here, you know, we had this high here. It's not quite the same level. It's almost a 61.8. I thought that's where we were going. So we had these highs. And then on Saturday, we made a marginal new high. Everybody thought, oh, we're going up again after, you know, 2 days of sideways inside bars. And then, of course, we didn't. Failed, false breakout. And here we are all the way back at the lows. So it seems to have been like 2 weekends in a row, false breakouts. Then my spidey sense is tingling. So there we go. Hello, Lisa. What a market indeed. Certainly is. Okay, so just that's something to watch out for. If you see on a Saturday or a Sunday what looks like a breakout move, you know, just be a little bit wary of it. So most alts today have fallen sort of 10 or 15% or more. You know, the blue chips of most of them have fallen 10%, which is not fun, is it? Really, not fun. So let's take a look. I'm just going to get my list of charts up. Here we go. So we haven't looked at Ethereum. Ethereum is, I used to call Ethereum Bitcoin's twisted sister, but actually it's become much more technical lately. And so we can see a very similar pattern. I'm just going to tidy up my charts here. Today we have lost the daily 50 moving average. That's exactly what happened in the S&P. So really we should be looking from here lower to the 200-day moving average. Pull back to test support from that. If this is our first swing of correction, this is our B leg, then in Ethereum, I'm going to measure from this high to low. I'm just looking at whether we are at a bounce level yet or not. And the answer is not yet. In fact, that 61.8 level is a bit lower than this 200-day moving average. And it's down here at 23.86. So there is one thing though, this is a bounce level, no doubt about it, in Ethereum. If I short term, let me take that away and look at it on a 4 hour. We've got this head and shoulders pattern, haven't we? So really, if we say what was the kind of low, or if we look at it on the daily, it's kind of clearer too. These lows here are acting as support at the moment. So potentially, you know, back to the bottom of wave 4 is normally where you would look for a market to come back to on the first wave of correction. So here we've got 1, 2, 3, 4, 5. Nice 5-wave rally, and we've come back to the bottom of wave 4. So potentially, if we're going to stay in an uptrend, this is support. This really is kind of in this area is trend support, isn't it? If we don't break these lows, you know, all we've done is pull back to the previous low, and we could very easily carry on higher from here. If we put our fibs on, it would probably line up usually with sort of a 38.2 retrace or something like that. And we're underneath it. Okay, so you know, potentially this is a bounce level. So if we've got our fibs like this, and this 38.2 certainly worked very well here, now we're going to look for this 38.2 to see if it's resistance. So if you're looking where on this bounce, where would be the bearish level for Ethereum to bounce back to, it would be a back test of those lows and this 38.2 fib level, 31.36. Back above there, you know, well, let's see how we go, you know, because potentially we could have completed a correction like this. You can see this is a 61.8 level. If we closed above that, that would be quite an interesting look, wouldn't it? And we could just rally away from here and the correction could be over. So I'm going to say back above 31.36, that would be quite a bullish signal for me. So that's how I'm seeing Ethereum. If we move this up a bit, potentially we could call this a head and shoulders pattern, but I like them to be more symmetrical than this, and this really isn't very symmetrical at all. So we'll just call this a congestion zone and a support level for now. Okay, if we look at harmonic patterns, how that would apply here, and where we reversed. When you reverse at a 786 fib, I don't think this quite, it might have tagged the 886. If it did, we've already hit our target. No, it didn't quite. Yeah, so this does suggest that we've got further to fall, I have to say. But potentially we're at a bounce level here in Ethereum. Okay, I'm going to move on to some interesting charts that we've been watching lately. One of them is Solana. Okay, this chart, while everything else was not doing very well, massively outperformed, hit a big target if we go into log scale like this, you can see I feel like potentially, you know, we've hit 5 waves up. This was quite a big wave too. I feel like more likely this is a bit of a wave 4, but this has been a very, very extended wave. And normally we would look for a pullback if this was just, say, a wave 3 to 38.2. We've lost that because it was so extended. I think, you know, 50% or 61.8, and we wouldn't damage the trend at all in this one. So these fib levels, and I've just drawn this most recent swing in Solana, have been respected. Look, the 236 was support, then it was exactly resistance, the 38.2 was support, now we're underneath it. So I think Solana continues lower from here, and we haven't held this support level. If we're looking where might we find resistance, 141.93 would be the first place I would be looking on a bounce to sell it. And if we got back above the 20 moving average, I would say probably we've got a bit of a bottom in. So Solana further to fall, unfortunately, to 119 and maybe 96. Luna is another one we've been watching. Is it back at a level we want to buy it? Yeah, that's the main question. Just going to find Luna, 1 second. Where have you gone? Okay, here's Luna. Alright, so let's go to the weekly chart, because this is another one. Lovely, lovely, huge outperformance. And corrections begun. I'm going to put my regular candles on. Again, I feel like 1, 2, 3, this is a wave 4 correction. That means that we shouldn't come back below this low. But where are we at? Because, so I'm going to put fib retrace levels like this. 50%. Again, this is another one, because here's our 38.2. We're at a really good potential bounce level, just like Ethereum here in Luna. So these previous lows, daily 50 moving average, there's lots to like about this level. It doesn't really line up with any fibs, but that's fine. If we were to bounce here, we could very easily bounce back and retest this 20 moving average and today's high at 33.30. I'm not sure if Luna correction is over, but you know, it's quite a tempting place for Luna to bounce from. It would be an equal measured move correction. Yeah, really good support and resistance level. Daily 50 moving average. It's quite a lot to like here. I suppose if I was looking for a bounce candidate that might stick it and not continue lower, Luna would be one of them. It would only really be confirmed though back above this daily 20 moving average, which is here at 33.35. So above 33.35, Luna's on the way. You could connect the highs, draw it as a little bit of an hourly channel. That's always a good one to watch out for, confirming a breakout, and that would line up with the hourly 200 moving average as well. So Luna, potentially, if I was looking for a bounce candidate, probably Luna is my favorite. Okay, well there's a couple more, but we'll get to them. So what about some other recent favorites? Let's look at MATIC. Are we at support in MATIC? And I'm going to say in this one, I kind of think we might be. Okay, because for me, unlike, say, for example, Bitcoin, when I zoom out and I look at MATIC, I feel like MATIC, this was a big 3-wave correction and we finished it. And now we started, hopefully, a new upswing. We rallied to the 50%. When you rally to a 50% retrace and reverse, you know, mean reverting markets tend to keep mean reverting, and reverting to mean means back to halfway back. So we rallied 50%, we pulled back 50% here, we rallied 50% again. I feel like we've got another leg lower, but all of this says this is just a correction before we go up again. So yeah, I don't think this is ready yet the way Luna is, but I don't think it'll be too long. Now, tiny bit further would be where support I would like to see hold 1.076. Otherwise, I think this is likely to do a kind of much deeper pullback. So yeah, if this support holds as well, potentially 1.076 on a close, then potentially MATIC is a got good support here, let's put it that way. So I'm watching that one, not a buy yet. I really kind of need to see a little bit more. So for me, short term, I like to see, we are bouncing here, aren't we? So I like to see a big bounce usually, and then a retest or a higher low, something that reverses all these hourly moving averages, all these lower time frame moving averages, like 15 minutes. If we see that, then I feel like I have a bit more confidence and something that I can lean against to buy. But all of these chart setups, right? When is this likely to come? Probably Wednesday. We've got to get the Fed out of the way on Wednesday, and so, you know, let's see them bounce here, and then let's see the pullbacks on Wednesday. And if we can, because I do think it could be really volatile, and we need to be a bit careful. And we could have a couple of funky overnights with the markets closed in China and Japan. That's quite a big chunk of the overnight market. Okay, so let's look at some more. So we're going to look at ADA, Ripple, NEO. We will do requests, don't worry. I will do AVAX, no worries. So ADA fella out of bed today a little bit. Is not happy. So remember, when you have a correction, okay, so we have a lovely big rally here, and now we're looking for a three-wave correction in ADA and the uptrend to resume again, right? We could, when you get underneath your daily moving averages, you could end up back at the 200-day moving average. That would be a very common place to look for. So that's what I'm looking for in ADA. Now, if we measure this swing and the rally, and we project it, so we measure this swing lower, project it from this bounce, we are at the moment underneath this 61.8 level, and a little bit at risk that we continue lower if we stay underneath it, 2.114. But if we've just kind of overshot today and shouldn't in fact have done that, let me line this up a bit more carefully. I think that's, yeah. Now, here we are, that's, there we go. Okay, the 61.8, 2.12. I think a daily close back above that might not be quite, that would say that we're going to at least bounce back and retest these moving averages. When you get underneath the daily 50 moving average, usually if you're going to keep going lower, it's resistance. So confirmation that we're going up would need a close back above that daily 50 moving average, and that likely is to be resistance. So 212 resistance, and if we get above it, 231, and then I do think that we are set for more downside, unfortunately, in ADA to 1.7, unless we can get back above them. So yeah, not a bounce candidate for me yet in that one. Just not kind of clear enough that the correction's done. So I'll take this out of the way. I don't need that. If we look at this on a weekly chart, it wouldn't look crazy to come back to there. Now, we will stay in an uptrend if we come back to here. To be quite honest though, in terms of this weekly chart, we could come back all the way, couldn't we, to those previous lows, hold those previous lows and rally away again and still be in an uptrend. And that would be all the way back to round number 1 for ADA, so 50% further from here, just because I know I've got it in log scale, but we've rallied so far. So, you know, we need to be a little bit careful that we do hold these supports. So for me, I'm going to mark them, but again, I'm going to watch on a lower time frame what we do when we get there. I want to see a bounce and a retest. I want to see it make some kind of a bottoming pattern. I'm not going to just buy it blind. Yeah, unless we get like a absolutely bloody day on Wednesday, and you know, then and it drops like a rock in a wet paper bag right to the level, then I would buy it. So yeah, a bounce level potentially. I'm watching today's close in ADA. Ripple has also had a little bit of a rough day. Let's go to the weekly chart of Ripple. Now, I feel like this is not awful for Ripple, because again, this is potentially a, let's tidy up our chart, support level. We've fallen pretty hard, but we've fallen back to the a big 236 fib level from this high to this low, and these fib levels are working really well in Ripple. The 50 was resistance here, the 38.2 was resistance here. Now we're looking for this 236 to be support, and this weekly 20 moving average for a bounce. So if we look at this on the daily, 200-day moving average, big fib level, if we were to dip down and then close back above that, it really wouldn't look quite so bad for Ripple. Let's measure these two swings. Yeah. So back above 0.95, I think Ripple could see more upside and potentially correction done. Let's see. If we close back underneath 0.869, I'm wrong. This level has not held, and we're looking for lower, and so today's low is a little bit important support. Let's try and hide this. See this the other way. Okay, so we've done, I would say when you reverse to the 786 fib, your target is back to the 38.2, so we've done that. Come back to the middle. To be honest, we could go either way here, couldn't we? Let's do this short term. Yeah, I will do those requests, don't worry. Yeah, look, even short term, tiny bit lower we've got room to this 61.8, 0.862. So we've got room to go a little bit smidge lower, and then a bounce. And then if we bounce back above that 50% level, would say reversal. So back above 0.9682 would be a reversal. There's our zones then. Here on the hourly, this is where we are. I haven't quite lined it up, but there we go. So a little ABC correction, that's where I would expect to see resistance. 0.968. If we get above 0.968, that would be a really good look. But that's where our resistance is in Ripple. We're a little bit sideways at risk of lower in this one. It would be quite an interesting look if we closed above the daily 200 moving average here, wouldn't it? But if we got stuck underneath it and that became resistance tomorrow, we are going to keep going lower, unfortunately. Okay, let's look at a couple more. NEO, ORN, REN. Okay, and then we'll do a request. So NEO, been lots of interest in NEO. NEO has behaved really nicely technically. So technically, let's hide this for a second. I'm going to zoom out. Hide my football. I should really have them here. Yeah, this was one of those irregular corrections where we couldn't make a new high. Anyway, rallied. I was hoping this would become an inverted head and shoulders pattern. It still could. We haven't come below this left shoulder. If we were to make, after a big rally like this, a nice three-wave correction and turn higher again, then that is probably what we are going to get in Neo. Master Inhibitor, so you heard all idiots are going into Digibyte all over. Well, I'll take a look at Digibyte chart at the end for you, if you like. So, yeah, potentially, you know, this is what we're looking for. We've had a big rally, three-wave. If we were to get a three-wave correction, if it was to be a nice sort of equal measured move, or a move where this second swing was 61.8 of the first swing, then that's where we would look to go up again. And we haven't reached that first target yet for Neo. That means we've got further to fall. 38.45, I think. There we go. So we are at the 61.8 here, retrace from the lows. Again, it might be that we bounce back above this 50% level in the middle, would say that we were going up again. That's our support and resistance. It comes all the way from here as well, doesn't it? So you can see that's what we've got to get above. 45.93. So maybe support here, maybe support a little bit lower at 38.45, and back above there would be a bullish reversal. If we don't find support at 38.45, we could do a bigger deep retest, and it wouldn't be the bullish pattern that we're kind of looking for. So Neo still got, yeah, a bearish, nasty bearish reversal on the daily. We're underneath all of these daily moving averages. We have to be really careful that we see something that makes us really want to buy it. Now, for example, down here, this is a little, you know, we're going to have a little bit of a bounce here, but we're a long way from these moving averages. I would expect us to have a bounce and then the retest. That'll tell us what's really going on, and if we really are going to go up in Neo. So be patient. Remember, we've still got to get Wednesday out of the way, and Wednesday could be ugly. It just could be. Okay, let's look at ORN and REN. Okay, ORN. This chart was really popular in my group. We like this. There's a couple of charts that have really cool chart patterns. This is one of them. Look at this lovely, potentially inverted head and shoulders pattern. I'm not a big fan, I have to say, that when the neckline slopes up. I much prefer them to be either horizontal, measure them as horizontal, or have a ones that slope down. Now, if we were to measure this as a horizontal, we've got to say that this is a little bit of a false breakout, isn't it? And head and shoulders patterns usually fail when they are just ABC corrections. So if we were to measure from here to here, and it lines up with that 61.8, that's what we couldn't get above. So I don't anymore, unfortunately, think that this is an ABC correct, a head and shoulders bullish pattern. I think that this is an ABC correction, and we are unfortunately still in a downtrend and have not managed to regain this 200 moving average. So now we need to come back and test support. Well, if this is a sideways range and our support is down here, isn't it? And that's likely where we come back to. So I'm a little bit neutral, ORN. There are some things to like, potentially. It's good that we are holding this daily 50 moving average. This was support here for 4 days before we rallied to new highs. And technically we haven't really broken down until we close underneath that. And you can see, you know, many times when we were in a downtrend, it was resistance. When we're in an uptrend, it should be support. It's like your backstop. So, yeah, this could just be one of those false breaks lower, and we could carry on and go back up again. And yeah, I could be wrong about this. bearish pattern, but I'd like to see it do something really, yeah, I'd like to see a bit more of short term, a bit more of a base, I think, you know. Just makes me very nervous. Now, if this swing and this swing were equal, let's show you what I mean here. So, so normally if we're in an uptrend, we'll make a three-wave correction like this, and we'll carry on, right? Sometimes, though, you will make a funky one, so, or you make it like that, and you carry on, okay? Sometimes they can look like this, so it looks like you're still in an uptrend, and then you carry on. Well, what if that was the case here? And if that's the case, this swing and this swing were equal. So if this swing and this swing were exactly equal, and we went higher from here, we could say that that was just one of those funky running corrections, couldn't we? And actually, wasn't the bearish thing that we were thinking. So let's measure from this high. And look at that. That's exactly where we've stopped, where this swing and this swing are equal. If you don't believe me, look here like this. We'll measure it like this. And you can see that's this low. So these two swings are equal. So for me, if we were to rally from here and get back above 10.16, that's what I think we've just seen, and that would be really bullish in ORN. And so this is really interesting support right here at 8.28 and above 10.15. Yeah, that would be bullish correction over on our way up again. So that's your resistance as well, isn't it? 10.159, 10.16. Okay, so let's take a quick look at REN. Now I like REN because this is another one where, first off, we have, you know, this does look like a nice rounded bottom, and you know, when you get to the 50%, you come back 50%, and so on. When you get to the 61.8, you come back to the 38.2. So this is really good support for REN to rally from. 200 moving average, 38.2 golden ratio zone thing going on. A really, really good support level then for REN. It does look like three waves back on the 4 hour. This is really good support from the 200 moving average, which was support here and support here. If we look at the hourly as well, are we making a little bit of a base here? Yeah, we are. So I think potentially REN is at a really cool bounce level. Like to see a little bit more. It might take a day or two to find our feet and turn the ship around here. After, this is what I mean. Sometimes after you have a nasty drop, you need to go sideways for a couple of days and retest the lows, just like here. And that's what I would like to see here in REN. And if we could do that and hold this level for a couple of days, yeah, I think REN has a lot of chance here. Back above the daily 20 at 0.8 would be good. Back above 0.92, and I'm very bullish. Next leg up. So next leg up would take us to 1.449 for REN. So I do think that's a nice chart and a really good place to look at a pullback. Okay, so let's look at Cody, Rune and Avax. So Cody. I think I might have Cody here. Here we go. Let's look at this on the weekly. So the bullish way to be looking at this, let's put regular candles on. The bullish way to look at this would be, we've made a big three-wave correction and this is a new upswing. A really nice look would be an inverted head and shoulders pattern here, wouldn't it? left shoulder, so a continuation one. And yeah, I know not all technicians agree with them, but I think they're valid. So, you know, that would be a good look if we could get back above this support and resistance here, and this 786, which is 0.4354. So far, gosh, 1, 2, 3, 4, 5 weeks of sideways. Well, is this correction ever going to end? This looks again good, but here we go. 1, 2, 3 down, 1, 2, 3 up. So we're in our final C leg, if you like, 1 A, B, C, or third wave. I'm just going to take this away. Before I go though, 786, this 236 fib should be a bounce level. We should bounce from here, and these daily moving averages are very supportive of that, back to the middle, back to 0.3625 in Cody. This is a really good place to bounce from. So we might squeak a little bit lower in the next day, down to that daily 50, but this is at 0.295. This is where I would expect Cody to build a base. So we just got here. Looks like a nice little lower high on the hourly. That's what I'm looking for. This is a really good level. And 0.295 and back above 0.3625 would confirm that reversal. That's where the resistance is. So yeah, Cody's not got potential. ORN I've done. We'll take a look at Rune though. Let's see if Rune is here. There's been so many nice chart patterns lately that haven't worked. It's been quite frustrating. Okay, I'm just gonna tidy this up. Let's see where we're at. So, big picture, this is another chart where potentially we've done our 3-wave correction. This is a new upswing. So we have wave 1, shallow pullback, wave 2, sort of 50% back, and up we go. And we could also say, well, 1, 2, 3, 4, 5, again, 5 weeks. It's time to go. The problem is this. The problem with this is, gosh. So when you do what you think is a 3-wave correction, you watch the rally and you're looking for 5 waves to really say that. And this, unfortunately, baby, gosh, it's difficult to see that as 5 waves. It might be 1, 2, 3, 4, 5. In which case a 3-wave correction would be a really nice buy, but it may also point to another big leg lower. This is a tricky one, Rune. And look at these daily moving averages. They're all flat and they're all pinched up in the same place, which says, and we're going sideways, which says no trend, and the market's not sure either. Okay, so let's apply some logic. So that was a 50%. So then you come back 50%, and then you kind of go rally 50% again. I think we're going to see another leg lower here, unfortunately, before we go again. Potentially it could be so if that was that. Okay. And then we're going to drop a bit further anyway to 6.31 next, unless, because if we take this away, look, So I've measured from here to here. Here's our rally. This is a funky one though. When it gets funky like this, I prefer to draw it in a channel, connect the highs, and say this is kind of really our downtrending channel that we're in. And when we break out of here, so we're going sideways around these moving averages, by the bottom of the channel, look for us to break out of the top. And potentially that we haven't finished going down yet in Rune. I'd love to say it's a really ideal place, but it's not. A big strong rally today, because this is this 50% level, isn't it? So a big strong rally today and to a false breakdown below it, that would be quite a strong look. But then I probably would still wait until we were back above those moving averages. I think I'm going to watch the close on this one and see if we can make a base here. Otherwise, I think if we hold underneath 7.74, so here we are at the moment, right underneath this. If we get stuck underneath it now and it becomes resistance, then it's not going to look so pretty. So if we try to, or bullish, so if we try to rally back and then get, you know, then we've lost, unfortunately. It is a good level if it can hold the support in Rune. I'm not sure that we are at the moment. I'm going to say I'm neutral until I see if we do. Okay, AVAX, where is that? Got charts everywhere. Sorry about the dog. Okay, AVAX. Okay, not target. So we've kind of pulled back to ideal support for me. This 20 moving average, you know, it's not the highs here or here, but it is the closing highs, and it's sometimes the closing price becomes kind of one of those important levels. So potentially pretty good support and resistance for that reason. But for me, first time back to the daily 20 moving average, you kind of always want to see a bounce. So AVAX, although this is a very bearish looking candlestick pattern, is actually back at a level which is very interesting for support. And not only that, but we've bounced from this 20 moving average to close, or looking like we could close back above this 236 fib. That keeps us pretty solidly in a daily uptrend, and just a pullback in an uptrend, and then we're going to look and see, are we going to make a double top, lower high, something like that. This is a bearish candlestick pattern. The first place I would look, if we close above this 236 fib, I think we'll see more upside. And the first place I would look for is 50% of the open close of this candle. So, you know, a bit further. And then maybe potentially a full retest of the highs. Because this is the highest high here, because this is only one swing lower, you know, you really should expect a bounce and then a third leg of correction. Sometimes you make a new low, sometimes you don't. If we were going to go be bullish, it would look something like that, like we did here. Look, 1, 2, that's the kind of thing I would be looking for. If we close though underneath this 236 fib level, which is at 60.47, I think that we'll see more downside, and it will become resistance. So 64.47 is the important level for the close tonight in AVAX. Okay, I'm going to look at crude oil. How I looked at crude oil for a while. Okay. So we're past. I need to change this to October, so November now. Sorry, we're going to switch to November chart. We go to the weekly because we got a pretty decent lower high. We haven't managed to change these highs, have we? And whenever you do that, I feel like this is started in a sideways corrective phase. Whenever you can't do that, like if we're going to stay in an uptrend, so if you retest the highs, I would look for a shallow correction, and then as long as you stay above this 236 fib level, or you stay above the daily 20 moving average, potentially you're still bullish and we haven't finished. So we can say about oil here in the November WTI that although we are capped by these previous highs here at 72, 73, we have not broken down in a bearish reversal. A daily close back underneath 70, that round number 70, that would point to this being a bigger correction for oil. And by bigger correction, I mean this swing, then another swing. And the sideways continues. Big picture, I'm going to zoom out to the monthly. And I'm going to look at, actually, let's look at the front month continuous, because on the monthly, there's a few things here. I'm going to go higher. Okay. I've got the USO up, hold on. So, sorry. We need to, I'm thinking, oh, what's going on with the price here? Let's go back to, okay. I'm just going to look at this contract for, because I want to see the front month continuous spot price. Okay, not enough history, not that chart. Okay, here we go. Okay, we'll go to our monthly chart here. On any chart, previous highs and lows, especially around sticky levels, 75, 50, 100, they're always sticky levels in oil. And if we look left at 75 here, we can see this is a really sticky level. Highs here, lows here, highs here, and this is this feels like a retest that's kind of struggling. Again, I'm not bearish unless, because we haven't pulled it back enough, and we are still in an uptrend. And if I put big fibs on, so I'm gonna just put my fibs from 0. I know we went underneath it, but you can see that big fibs, big picture, all the way from the 08 highs. These major fib levels have been really important. 236 fib, when we got above it, was support. This 50% level is also a big deal. So potentially, when you reverse at a 50% level, you will come back 50% if you break this 38.2 in the middle, and that's where these monthly moving averages are sitting. So big picture, I think our support on a bigger pullback is at 56. So how does that look if we, and also that would be this previous swing low, isn't it? That would also line up if we were to make a big ABC correction here from this lower high. That's, I think, where we come back to. By that I mean, look here, so I've been kind of, I'm actually not bullish. I'm not very bullish oil, to be honest. I'm just not. I know it's Okay, so yeah, back to 58, 56, 58 for sure anyway, wouldn't be a surprise at all. And that would be, yeah, very doable for oil. At the moment though, we would have to break these daily moving averages, and we would have to break that 236 fib level from the low, and if we don't, we're still going up. So 70, we need a daily close underneath 70 and underneath these daily moving averages. Otherwise, we could see a full retest of the highs, we could see a spike, you know, retest of this high, you know, any kind of a double top or whatever. I think a lot is going to depend on, believe it or not, you know, although crude is still sensitive a little bit to the dollar, not as much as some markets. So I think a lot will depend on what happens. If I look at Brent, okay, Brent is sometimes a much more technical market. Here's Brent at the monthly 200 moving average in a little bit of a declining wedge. And hold on, let me bring this down to the most recent swing. No, not you. You. I kind of like to look at the fib levels like a ladder. Okay, so this 786 that we've gotten above on the monthly is now support, really, isn't it? 71.58. I think if we got back underneath it, we would see a bigger pullback. We could also go, okay, put our fibs on from the lows. As long as we stay above the 236, this is just a pause, and we're still going up. And that's, gosh, that's got a long way to fall before that happens. So, yeah. I think that we're going to do a bigger three-wave correction. If you put a gun to my head, I would be selling rallies, and I would be looking for a pullback to that 63 level and a bigger three-wave correction in oil. Back to test that 200 weekly moving average anyway in Brent. So all of them are saying the same thing. Now I'm wrong if we just do a shallow pullback here on the daily, hold these daily moving averages and keep going up. So but yeah, I feel like, yeah, it's struggling to, for me it's struggling to rally. It's a big fib level. I would expect a bigger correction here, and if everything goes down, oil at some point is going to as well. Okay, hope that helps. See everybody next time. Thanks very much for coming. See you on Twitter. So again, you know, I don't think that the world is ending, but I do think that we potentially for Bitcoin have started some sideways trading that could last us till the end of the year, and then I think it's a massive buying opportunity. So save all your Christmas money. It's coming.